On September 10th, the cryptocurrency world watched in awe as a staggering $750 million worth of Bitcoin flowed out of exchanges. This unprecedented movement caught the attention of traders, investors, and financial analysts globally. This massive outflow, one of the largest in recent memory, sent ripples through the market, causing a whirlwind of reactions. The sudden shift in Bitcoin's location raised eyebrows and questions about the underlying reasons. Sparking intense speculation and debate among investors and analysts alike, conversations buzzed with theories ranging from market manipulation to strategic repositioning by major players. Such a significant movement of Bitcoin inevitably raises questions about its implications for the future price of the leading cryptocurrency. Analysts began to scrutinize the potential impact on market stability and future trends. This event wasn't just about the sheer volume of Bitcoin on the move, it was about what that movement might signify. The transfer of such a large amount of Bitcoin could indicate a shift in market sentiment or a strategic play by influential entities. Was this a sign of whales, those enigmatic entities holding vast sums of Bitcoin, preparing for a market downturn? The actions of these large holders often precede significant market movements, making their behavior a focal point of analysis. Or could it be a bullish signal, indicating growing confidence in Bitcoin's long-term prospects? Some experts believe that such a substantial outflow might suggest that investors are moving their assets to more secure long-term storage, reflecting a positive outlook on Bitcoin's future. As the dust settles, the true implications of this great Bitcoin exodus will unfold, potentially reshaping the landscape of cryptocurrency investment and trading. To understand the potential ramifications of this event, it's crucial to grasp the underlying dynamics at play. What Bitcoin outflows typically represent is a significant shift in the market's behavior and sentiment. In essence, when large amounts of Bitcoin are moved off exchanges, it often suggests a shift in investor sentiment. This movement can be a signal of changing strategies among investors. Investors typically hold Bitcoin on exchanges for ease of trading. The convenience of quick transactions is a major factor. Moving it off suggests a different strategy. It indicates a move towards long-term holding rather than short-term trading. Outflows can indicate that investors are moving their holdings into secure storage solutions, often referred to as cold storage. This is a method to protect their assets from potential hacks and security breaches. This typically happens when investors are bullish on Bitcoin's long-term prospects and are less interested in short-term trading. They believe in the future value of Bitcoin and are willing to wait. They are essentially locking it up for safekeeping. This action reflects a strong confidence in Bitcoin's potential to appreciate over time and a desire to protect their investment from market volatility. While the identity of those behind the September 10th outflow remains shrouded in mystery, it's highly likely that institutional investors played a significant role. These investors, known for their substantial financial power and strategic market moves, include hedge funds, asset management firms, and even some large corporations. Their involvement in the Bitcoin market has been growing steadily over the past few years. These large players have become increasingly influential in the Bitcoin market. Their decisions and trades can significantly impact Bitcoin's price and market dynamics. Their large-scale trades can move the market, and their growing acceptance of Bitcoin as a legitimate asset class has been a key driver of its price appreciation in recent years. This acceptance has led to a more stable and mature market environment. The sheer volume of the September 10th outflow, coupled with the increasing activity of institutional investors in the Bitcoin space, indicates a significant shift in market behavior. This suggests that these sophisticated players may have been behind the move. Their strategic investments and large transactions are often aimed at maximizing returns while minimizing risks, reflecting their deep understanding of market trends and financial instruments. As institutional investors continue to enter the Bitcoin market, their influence is expected to grow even further. This could lead to increased market stability and potentially higher valuations for Bitcoin in the long run. The involvement of these powerful entities underscores the growing legitimacy and acceptance of Bitcoin as a mainstream financial asset. Their participation is a testament to Bitcoin's evolving role in the global financial landscape. Looking back at historical data, we can see a compelling pattern emerge. Large Bitcoin outflows have often preceded periods of significant price appreciation. This correlation is not merely coincidental. It speaks to the underlying dynamics of supply and demand. When large amounts of Bitcoin are taken out of circulation, effectively reducing the available supply on the market, it can create upward pressure on prices. This dynamic, combined with increasing demand from both institutional and retail investors, has fueled Bitcoin's meteoric rise in recent years. Section 5. The Fortress of Cold Storage. The September 10th outflow also highlights the growing importance of cold storage in the Bitcoin ecosystem. Cold storage refers to keeping your Bitcoin offline, typically in a hardware wallet that is not connected to the internet. This method of storage is considered the most secure way to protect your Bitcoin from hacking and theft. It provides an extra layer of security, safeguarding your assets from the vulnerabilities of online platforms. Section 6. Deciphering the regulatory landscape. The preference for cold storage among large investors is also driven by regulatory concerns. The cryptocurrency industry is still in its nascent stages, and the regulatory landscape remains uncertain in many jurisdictions. By holding their Bitcoin in cold storage, investors can maintain a degree of control and autonomy over their assets. This can be particularly important in the face of potential government crackdowns or regulatory uncertainty. Section 7. A bullish signal. So what does this $750 million Bitcoin outflow really mean for prices? While it's impossible to predict the future of any market with certainty, this event could potentially be interpreted as a bullish signal. The fact that significant amounts of Bitcoin are being moved into cold storage suggests that some large investors are taking a long-term perspective, betting on Bitcoin's continued growth, and potentially bracing for a supply squeeze. Section 8. Stay ahead of the curve. The cryptocurrency market is constantly evolving, with new developments and trends emerging all the time. Staying informed and understanding the forces at play is crucial for anyone looking to navigate this exciting and often volatile asset class. As we've seen, large outflows can provide valuable insights into investor sentiment and potential price movements. By staying vigilant and monitoring these trends, investors can position themselves to capitalize on the opportunities that lie ahead in the world of Bitcoin.